I believe we are live now. Okay, so welcome guys. So I just needed to hold this class by this time. Normally it's supposed to be by maybe 7, but because of my engagement by that time, so I just needed us to, I actually promised us yesterday that we'll probably be holding the class today, right? So just do that. So hopefully others should join us, and anyone that will not be able to participate for today's class, we have access to the link later on, right? So I'll just do a quick recap, right, for the sake of those that were not around yesterday, and even for the fact that we were not able to record it. Okay, so even those that were around still needed to go back to what we talked about yesterday. So because of that, we'll just do like a quick run through, right, so that we all will be on the same page. Okay, so based on what we discussed that yesterday, I believe that by now some of us should have been able to forecast how next month market is going to be like, right, for every other market. Okay, so what we talked about yesterday is actually meant to help us and help us to be able to look at other markets. Okay, remember that this is actually crash 500 index, right? Crash 500 index. So with what we did yesterday, so we'll just do a quick recap, right, so that we can continue with what we have for today. Okay, so the first thing we said that your break of structure is very important. That's where we started from. Your break of structure is very important. Anything you want to do, make sure you are able to identify your break of structure. If you are not able to identify your break of structure, you will not be able to know the direction of the market. If you don't know where the market is going to, you should not be in any trade. Okay, do not trade any market that you don't know where the market is going to. So your break of structure is one of those very important things that will help us to determine the direction of the market. Okay, so and yesterday we just use crash 500 as a case study, right? And some of the things we highlighted yesterday on crash 500 are things that will really help us to inform our decision. Okay, if you notice now, you see that I've placed a sell limit here because I'm anticipating price to come here, maybe against tomorrow's a new month is starting tomorrow, right? So that is for the month of September, but we are already in a new week already. So this new week's candle will give us an insight into what is likely to happen for the remainder month of September. Okay, so I will not be in a hurry to want to jump, so that's why I set my limit here. Okay, so I'm hoping, anticipating that price will come back to that level. Okay, so remember we are just using crash 500 as a case study so that we can have insights, right? So that whenever we want to look at other markets, we can do the same thing. Okay, So even if you don't know, or even if you don't like or get to trade class 500, that doesn't mean the approach we are talking about is not something you'll be able to apply to your trading system. Okay, so we said that if you are a scalper, whatever things you are doing, you are scalping the market, or you are a day trader, you are a long-term trader, whatever it is, maybe your time frame is 5 minutes, 15 minutes, or whatever. The thing is, there are basic foundational concepts that cannot and should not be ignored. Okay, things like looking at the higher time frame perspective, right? Looking at the higher time frame perspective. So if you notice now, you notice that this is like the weekly time frame, and on the weekly time frame, I said when you just open your chart like this, maybe on that higher time frame, maybe on the weekly, daily, or the monthly time frame, depending on the higher time frame that is your choice of reference, right? What you want to look at first of all is for the break of structure. Okay, so I'm emphasizing this because these are the most important things. So you want to look for the break of structure, and the reason you want to do that is because that break of structure will tell you in what likely direction is market wanting to go, right? So for example, now we notice that what we have a break of structure here, and if you look previously, we have not had any major break of structure. Can you see all the way through from this high here to this high here? You notice that we've not had any major break of structure. The only major break of structure we had is this one here. So what does that tell us? It tells us that anything we are going to be considering will still be towards the downside, right? It will still be towards the downward side, guys. So this idea is the mindset you are trying to form as a trader. Okay, so this has nothing to do with your strategy. Okay, it has nothing to do with this is the best approach to the market. Once you've been able to incorporate this, have this understanding, because yesterday we talked about psychology, we talked about the edge in the market, that having an edge in the market is not about a strategy. Having an edge in the market is about your mindset and your psychology, right? That's what we said yesterday. So your strategy is one side, okay? Then your edge is about your mindset, your understanding, your psychology, right? So after identify the break of structure here, which is this case, we said that you should be careful, right? When we say we should be careful, what we mean is this. If you notice here, we notice the first break of structure here, but this wasn't really valid here because this particular candle here, you notice this particular candle never actually closed below this previous low here. It never did actually close below it. So that's why we said you have to be careful. Okay, so if that's the case, because we are looking at the weekly time frame, it therefore means for us this will not be like a valid break of structure. But if you go to the daily time frame, you will notice that the candles actually closed below it. Okay, so why we are considering this to be like a valid break of structure, because we can see this red candle here actually breaking out and closing below this low. Okay, so now this gives us an idea, right guys? This gives us an idea that we are still considering a downtrend market. Okay, we are still considering a downtrend market. Okay, so once we have that in view, this gives us this confidence that yes, the buy pressure is not to the upside, it's not to the upper direction, right? The buy pressure is not to the upside. So this gives us, a kind of like a confidence to want to say, okay, we are still in a sell trendy market. Okay, overall, even though you might see buying opportunities, you know that from this market, this trade, we have a sell idea, right? So now, after identify the break of structure, the next thing you want to do, okay, and these things are like the important things. Maybe you have been able to identify that break of structure on a particular time frame, let's say the weekly and the daily. It's best we just stick with the weekly and then the daily, okay? Weekly and daily is okay, right? That does not mean you cannot see break of structure on a lower time frame, maybe like the 4 hour, 1 hour, or 30 minutes, but it's best we stick to the higher time frame break of structure. And the reason, because those higher time frame break of structure hold more weight, okay? They hold more weight, they are more reliable, right? They give us better opportunity than the break of structure on the lower time frame. Okay, so once you are done with the break of structure, what we now want to look at now, just like we were saying yesterday, is the reaction of the individual candles after the break of structure. Okay, how does the candles react after market has broken structure, right? So if you look at this particular candle, immediately we have a break of structure with this um bearish candle here. You will notice that what we started having a kind of like buy on the weekly time frame, okay? And we said that what this buy gave us these two um long candlestick here. So with this buy here, remember our idea is that what we are in a sell market, in a sell trade, we are still trending downwards. So we just want to see, okay, what are some of the things that the market is doing, right? If we go to the monthly time frame, we notice that on the monthly time frame here, that every of our previous month's candle has actually been a bearish and a sell candle. So it was just for this month of August here that we are having like a bullish candle. So to me, this bullish candle might be like a form of retracement, right? So it's not as if market is just going to, out of the blues, just start pumping and buying upward, right? That's not going to happen. Okay, even though we are seeing a green candle and we are seeing buying opportunities, not as if market is just going to start pumping and buying aggressively, right? So that's the idea. So by so doing, when we come to this once we come to the weekly time frame now, just like I said, we want to begin to identify the individual candle, right? So just like I said trading will require your patience. Okay, you are an analyst when it comes to trading. Okay, this is um business. You want everything to be in your favor, so we have to be delicate in our approach, right? And this has nothing to do with your strategy, okay? Because your strategy is just one aspect. We just want to see what the market is actually doing, right? We just want to see what the market is actually doing. It's not about whether we have a good strategy or not. No, it's about having the right mindset as to what is going on in the market. Okay, so I said that now that we opened our chart here, you notice that for the past 3 weeks here now, these last 3 weeks candle have not actually been like these two candle here that gave us like a high pumpy retracement candle. You can notice that here, these two candles here, it's not really that aggressive per se. Okay, so if that's the case, that should suggest to us that the buy pressure is losing momentum, right? It's just losing momentum. It's just logic, and it is something that is so obvious. And we said that yesterday, whenever we see something like this happening, it suggests to us that we want to look at the levels in the market. Okay, we want to look at the levels. Where, at what level is this candles losing their momentum? Is it at a support or resistance level? Is it at an order block level? Is it at a supply and demand level? So we want to look at, that level that is making these candles now not to pump towards the upside. Because if you notice this candle that's pumped very well, it's supposed to have been sustained by either this or this. But as you notice that this past 3 weeks previous candle has not been to the upper side. So within 3 weeks, we are not getting any, you know any bias of buyers, any bias of, those people who are buying the market to keep pushing the market upward. And it's because we have a key level here. So if we look to the left here, you notice that what we are having something like an order block here, right? You can see this green candle here, guys. So let me just take this off so that we can see that more clearly. Take this off, and I'll take this off. So we can see this order block. Okay, so we believe that this particular level market is actually trying to react, right? Is reacting off this particular level here. Can you see that? So we have to highlight and take notes. Okay, so whenever you are seeing that market is actually losing momentum, right? If for any reason we believe that market is supposed to be buying because of this large pump here, and then for these these 3 weeks candles, that buy has not been sustained, it therefore means that we want to check, is there a particular level that market might be reacting from? And we said that what we noticed this order block here, so we just want to highlight that. Okay, so that's the reason we highlighted this particular candle here. Okay, we highlighted it, and so you can see that so far so good. None of these these 3 weeks past 3 weeks candles has actually broken outside of this order block. Okay, so we notice that this might just be like the end of the retracement before market starts pumping downwards, right? So that's what we established yesterday. So now, if we go to the, remember we're on the weekly time frame, let's go to the daily now. So on the daily time frame now, you will notice that what we have, there's like an order block here, right? So it looks as though market is actually respecting this order block here. Okay, so we can see that here. So it's as though market is actually respecting that order block level. Yes, so far so good. Market has respected this order block and this major order block here. Okay, so far so good. That's a good thing for us, right? So after establishing that fact there now, what we now said is, remember, this is like a top down analysis. This is like a top down approach for us in the market. Okay, maybe before towards the end of the class, I'll tell you guys what I've decided personally to do on this particular trade, right? Because I'm going to be taking an entry on this crash 500, right? So I'm expecting price to get to this sell limit that I've marked here, and then maybe I'll open 3 positions here so that I'll have my first take profit here, and then I'll have maybe my next take profit somewhere here, and then my third take profit somewhere here. That's if price will ever get to this place, right? So that's what I would do, okay, personally. So now, after establishing that fact, now we said that what that yesterday, what did we actually say? We said that if we are on the daily time frame now, you will notice something, that this is the leg. Now we want to consider this particular leg, we want to consider this leg. And when we are looking at this leg here, what we now want to look for now is still our break of structure, right? Is still our break of structure, because so far so good, market has been trending up with this low here, this low here, this low here, this low. So far so good, there has not been any break of any of this low here, okay. We are always seeing break to the upper side, to the upper side, to the upper side, right? So it therefore means if we are going to consider this market, if we are going to consider this approach, we want to see a break to the downside. All right, we want to see, and so far so good, we've not really had um a good break to the downside, right? So if we look at this daily time frame now, right, we cannot really consider this as our break of structure. Remember we said that whenever a candle breaks a low or a high and closes below it, then we can consider it. So for this, we can see that market actually breaks below and close below, right? So this is what actually happened here. But I'm not going to consider this as my change of character. Remember, a change of character is still like a break of structure, okay? It's just because of what the break of structure is doing now. It's not just a break of structure now, it's not a change of character. So this change of character now, I'm not going to consider it. Why? Because this low here did not actually break this high here, so I'm not going to consider it. So the only one I'm going to consider is this here, okay. So I want to wait for market to actually um break below this low, close below it, before I will agree and accept that my change of character has actually taken place, okay. If that doesn't happen, that I'm still just going to observe this market, right? So the other thing is, after a change of character has happened, we should anticipate a retracement, right? A final retracement before market keeps selling. And then another thing we can consider is this: even if market does not get to break or give us a change of character here before it retraces back here, if market retraces back here, we are going to be taking a sell, right? And the reason is because we said yesterday that we have another block here. Remember, we have another block here on the 4-hour time frame, okay. So this for us will be like a good risk. This for us will be like, okay, like a good risk for us in the market, and a proper time for us to enter if market is actually going to respect this particular order block level, okay. So that's how we are going to look at it. So it could mean that if market today, because today's candle, it marks the beginning of a new week, okay. and then tomorrow's daily candle, markets might want to take out today's high. Okay, tap into the order block before it starts selling. So tomorrow's candle is still part of this week, but it will form the beginning of a new month candle tomorrow. Okay, so whatever will happen today, there are two things that is involved now. Is either we wait for this week completely to be over before we know if we're actually going to buy or sell. Okay, it's either we wait, but most importantly we must wait for today's candle to close. So maybe after the close of today we will know the final decision of crash 500. Okay, so don't be scared if market starts pumping downward and starts selling massively. Don't be scared. Okay, just allow market to do its thing. And that's why I said no one is in control of the market, right? That's why we have to analyze, right? So if you don't analyze, it's a proof that maybe you feel that you have gained mastery, total control of the market. Okay, so it's either we wait for this week to be over, or as it is approaching the end of this week, because today marks the beginning of a new week, Sunday till Saturday, we will now have an insight as to if we should be selling or buying for this month, or if we are going to make any decision, let us wait first. Let's not be in a hurry, because sometimes we might want to be tempted to jump into a trade because we feel that the trade might leave us. Okay, so let's just wait for it to actually play out, let it end first before we do any other thing, guys. So that's how we are going to approach crash 500. So please, I believe this will just be like the recap I talked about, but yesterday was really insightful, right? But at least we just did this recap for the sake of those that we are not around. Okay, so what's going to happen now? We'll look at another market, right? And what we just did now, we'll look at it and see how we are going to, analyze it, right? We are just trying to build our mind, right? So if you have a strategy, I believe everyone here in class has a strategy. Either you are using my strategy, the one you got from the mentorship course, or you have a better strategy. The thing is, everything still follows the same foundational principle, right? Your break of structure, your key levels, your candlestick patterns, your chart patterns, right? So your bias, right? So those things, your strategy will still align inside of those things, right? So you won't use any strategy outside of what we are just talking now. If not, you not be able to become profitable, or at best you might have momentary, results, and then later end up blowing or losing those funds. Okay, so these are some of the ideas we want to have in the market. So let's just leave crash 500. Let us see if we can have any other markets. So let's see, aside from the boom and crash, let's look at VIX 10. I don't know if VIX 10 is okay now, or which other market. Can we choose between maybe VIX 10 or VIX 25? Let's just look at any of them. I don't know, maybe you can just leave in the comment section. Let's see which one will be okay for us to look at. So please, let's look at either one of these. So if you can leave in the comment section, so that if you can just type, let's just see. Okay, maybe we'll just look at VIX 10 or VIX 25, right? So the one that will be okay for us to look at. So follow the same approach. Okay, follow the same approach. Right. So let's see VIX 25, or maybe we'll look at VIX 75 together. Okay. All right. So let's just look at VIX 25, right? Let's look at VIX 25. I'm considering we'll look at VIX 25 now, because okay, we can look at VIX 25. Or let's look at VIX 25. Let's check VIX 75. So guys, let's just stick with VIX 25. Okay, so on VIX 25, let's go to the weekly time frame. So if you look at VIX 25, guys, you notice on the weekly time frame, sorry for my chart, let me quickly remove other markets so that we will not be interrupted by them. Okay. Okay, so now if you look at, so it's the same approach, the same thing we did on crash 500, guys. So that's why we say it's just a mindset thing, right? So if you look at it now, you will notice, remember our fractal helps us a lot. If you look at this chart now, you notice that what, okay, we have a low here, a high here, we have a low here, right? So let me just highlight that. We have a low here, we have a high here, right? We have a low here, okay, and then we have a high here, right? So you notice that we have a low here, okay. So guys, you can see now that it is so clear that our direction is what is an uptrend. So whatever we want to be doing now, we want to be looking for buy opportunities. Okay, we want to be looking for what? For buy opportunities, not sell. That's what I'm saying, guys. See, if you are using a strategy does not determine whether you should be buying or you should be selling. It's what we are doing now that determines whether you should be buying or selling. What your strategy helps you to do is to just buy or sell. So based on what we just look at now, VIX 25 now, I want to use my strategy more in the direction of what the market is doing. So we believe now that the market is showing us, and remember we talked about the zigzag tool yesterday. So if you bring the zigzag tool, you see that this zigzag tool also confirms to us that we should be looking for buy opportunities. Can you see that, guys? Can you see how the zigzag tool align perfectly? You can see. So if that is the case for the zigzag tool, it therefore means that we're looking um for buy opportunities, right? Okay, so we notice that, so now that we have been able to say that what our bias what is an uptrend, let us look for another thing that will help us inform our trading decision. Okay, so if you look very well, you notice that that this is the retracement leg here, and this is the last impulsive move upward. Okay, that gave us this break of structure. So remember, guys, that this break of structure here is actually valid because market closes above it. Okay, so we are just going to highlight that here. You can see it here. So you can see that market actually closed above that, guys. Okay, you can see that, right? So market actually closed above that. Okay, so if that's the case, remember now that if we look clearly now, remember this was the last impulsive move here that gave us our break of structure, right? Now we saw a retracement down. Remember that this candle here gave us a rejection. So let's look at, maybe there was an order block or something that led to this strong rejection here. Let's go to the daily time frame to see that. Okay, let's go to the daily time frame to see that. Okay, so let me see now. Okay, so we have another block here. We have another block here, guys. Can you see that? So another thing I need to say, guys, is when it comes to trading, right, you you have to be dynamic. That's another thing, right, I want to say. You have to be dynamic. Okay, because now you notice something here. You say, oh, we have this last candle here, which is like a last um bullish candle, right? You might say, okay, why didn't we pick this? Or even this, not even this not our bullish candle that we are supposed to use, is this here, right? This red candle. Okay, so if you notice here, so you can say that okay, this where we are supposed to highlight, right? So let's just highlight that and see what happens. These are bullish order block, right? Because this is the last sell candle. Okay, this is the last sell candle here. Okay, so that's the last sell candle. So if you look at it, guys, you will see that what market is not actually tapped into that other block, right? It's just looking very close, very small. Okay, market did not tap into it, right? So let me remove this here. Let me remove this. Okay, market did not actually tap into it, right? So if we go to the daily the weekly time frame, we can still use here as our bearish order block. Okay, this is, I explained, if you remember, I explained for those that have gone through the mentorship course, I talked about order flow and order block, right? I talk about that. So this is what I'm going to explain now, and then I will still add something to it that I didn't say there. Okay, so please at this moment you have to pay attention now. Okay, so here we can use this, consider this as our order block. That's why I say we have to be dynamic in our approach, guys. So it's not as if there's a rigid rule. You have to be flexible in your analysis. Okay, so let's consider this now as our order block here. Okay, that's our weekly time frame. Okay, now for those of us that is making use of system, maybe the reason why so this are order block here, and this order block is a weekly order block, so we are considering this. Okay, so price actually came back inside of this order block. Okay, now what I have to say now is this. If you are using a system, right, if we go to the daily time frame, your system might suggest to you, we have time frame like the 4 hour, the 8 hour, the daily. I don't know if there's 2 daily candles, so I don't know if that's the case. But if there was something like that, then we believe that this candle here either 2 days candle or 3 days candle would have met, let's just use 2 days candle, would have met our criteria here for an order block, right? But that's just by the way, that's not the main thing. The main thing here is this, that we have an order block here. Okay, and remember we talked about an order flow. So if we go back to the daily time frame now, we can consider this to be our order flow, right? So at any point the market is reacting off from any of this candle here, okay, we can consider that to be our order flow. So if you notice here, price can react from this red candle here. It can also react from this red candle, which is that last order block, but it didn't tap into it. Okay, now the reason why price actually came here and started turning upward here. If you look very well, you will notice that what we have like an FVG, okay, a fair value gap, like an imbalance, right? So we have like a fair value gap in the market, okay. So this fair value gap now, you can see it here. That's the space in between this candle here, the low of this daily candle here, and the high of this daily candle, okay. So it therefore goes to say that although price did not tap into this particular order block here, but the high of this particular order block still form, the basis for our fair value gap, right? The high of this candle form the basis for the high to act as a fair value gap for where price will react from. So if we have it here, you notice that what we can adjust that here, okay. Our zone now will be the low here and the high here. So let's adjust that. So if we adjust that here, we can have this, okay. We can have this here. So you can see how price actually respected the fair value gap beautifully here, guys. Can you see that? So you can see price came to fill the imbalance here, okay. So with that imbalance being filled there, guys, price is, you can see the reaction, okay, on the daily time frame, okay. So now this same imbalance here that we have is still part of our overall order block that is coming from the weekly time frame, right? So that's why I say we have to be dynamic in our approach as to what the candles are doing, okay, as to what the candles are doing, right? So we notice that's what is happening. So let me remove this weekly order block here. Let me remove it, okay. So now after we are through with that, remember this is the approach and the mindset we are trying to use for whatever decision we are going to be taking, okay. Now we notice the rejection here. Although this was a small candle. Now see, so let's say market decided that it wants to start dropping heavily. We can see from what market is showing us that that's not the case, okay. You can see this candle market closes with a rejection, which is like a buy, and this rejection here, so far so good, has not been taken out, okay. It means that the low of this particular week have not been violated, right? So it's still intact. And then the week that follows after, we can see that it did not take it out, it did not take the high, and then there was a buy, although it ended with what, with a sell, right? The next week that follows, which is this particular candle, took out the low of the previous week candle but never violated this, okay. It never tapped into the what, to the fair value gap, but for some reason it created what, a rejection, although it ended with a what, with a buy. Now this is this week's candle, okay. So guys, another bias I'm having for VIX 25, we can keep our eyes on this market that we've highlighted. So far so good. We said that what, crash 500 should go for like a sell. VIX 25 now, I'm anticipating it should go for what, a buy, right? Because so far so good, area of analysis has been pushing us upward on VIX 25, right? And then this week's candle starts with a very small sell, which is very what, insignificant. You can see the buying pressure now. So it therefore means that we can see this month's candle by 11:59 p.m. today, it will close. So this strong rejection could mean that what, once market open for next month and for this same month, there might be a little retracement. We're going to look at the possible places, maybe either on the daily, the 4 hour or the 1 hour, that market is likely to retrace back to, for market to pump and push price upward. Okay, so that's what we are going to consider. So let's go back to the weekly now. So this is what the weekly is doing, the weekly time frame. So at this moment, it's not advisable for someone to just come into the market and just jump into any of these trades, right? So we'll be watching out for retracement for either this weekly candle to close or the daily candle. So let's just look at more things in the market, right? Okay, so far so good. We can see that our imbalance has been respected. Okay, and then we have, if we look at this leg here, we want to analyze this leg here now. And the reason why I want to analyze it now, it will help us to know our time for buying opportunities. Okay, so let's look at this leg here, right? So this is like, remember we said this is our low here. Let's use this as our high, our low, our high here. Okay, and then we have like a new low here, a high here, and a low, right? So this gives us like a break of structure here, down. Okay, so we have this break of structure here. So we are going to refine this entry so that we can get like an early entry, to see where we can get like an early entry in the market. Okay, like an early entry. So after price has given us this break of structure down, so this is what we are going to be considering now. We are going to be considering this high, low, high, and this low here. Okay, now this high that was created here, we are not going to consider it, because if this high here had taken this low here, then we would have considered here for a proper change of character or a break of structure, right? So what we are going to be considering now is this particular high here, right? Because this particular high actually gave us a break of structure down. All right, and also we can see this break of structure here. So we are going to be considering this high for our change of character. But I don't want to wait, because you see that this is the daily candle, right? So it might take, like, let's say it might take some days before market actually come to give us this change of character or break of structure. So what I'm going to do is I'll go to the lower time frame. Okay, I'll go to the lower time frame to see what's actually happening here. So what I know now is market is creating like a shift in market structure here. So I'll just go to the 4-hour time frame. Okay, go to the 4-hour time frame and look for structure. Okay, remember we said that our bias is to the upside, right? Our bias is to the upside. So what we are going to do now is at this moment we cannot go to the 4-hour time frame or to a lower time frame to get more insight. And the reason is so that we'll be able to see at what time or opportunity we'll be able to jump to catch a trade. Okay, because if you just keep looking or doing your analysis on the daily time frame, on the weekly time frame, right, you will never have that opportunity to see where you can actually get in to trade the market. And just like I said, if we are actually waiting for market to give us a change of character here, you will notice that what it will take time, except we just want to wait for that. But we can actually go to the lower time frame to see if we have levels that we can actually watch out for retracements, right, to see if we'll be able to take a trade for ourselves. So let's go to the 4-hour time frame. Okay, so on the 4-hour time frame now, what we notice is we are having structure here. Let me bring out my zigzag tool. Okay, so here now you will notice this other block level here. Okay, remember we have another block level here. This is the candle, this blue candle here. And the thing is, we are not using the high of the blue candle, we are actually making use of the high of the red candle here. Okay, because if you look at the blue candle actually have little or no high, so we are going to be considering the high of the red candle. So let's just put it at that level there. Let's leave it at that. So price came to that level here, right? And when price came to that level here, price could not sustain and hold this level to break structure down, right? Price could not break this low here. Okay, so please at this moment I want us to pay attention, right? Because what I'm about to say is very important, right? And this is what will actually change the whole thing for us. Okay, because this is actually like it will change everything. Let me not say more than that, right? So just pay attention at this moment. Okay, so now whenever you see something like this in the market, you notice that market is reacting from this level here, right? And the whole idea for market to come to this level and react is so that market can come and break structure downwards. If ever that is the case, if market wants to test this place and break, but for some reason market reacted from this level here and refused to break our structure down. Okay, right? So now what we want to do now is to look and watch out for where market got to before it took out this high here. Okay, so the level that market gets to before it takes out that high will be the level where we want to mark for our entry. Do we understand? Let me just explain further so that we get. You will notice that what this level did not break our low here. Okay, so let's see the level that took out this high, because actually this is supposed to be our supply level. Okay, this is supposed to be our supply level, but for some reason price broke out of it. So let's look at where price actually broke out from there. Okay, let's highlight that here. Okay, I'll just remove this box now. Let me remove this box here. Okay, I'll remove this box here. Right, so once market breaks out, so once market breaks out of this high here, what we want to do now is to check the level that actually gave us the breakout. So it is that level that gave us the breakout that we will mark as our demand zone. So for now, so far so good, market has not broken out of this high, so we are going to wait. Okay, so let me begin to mark out the zones that have been respected. Okay, so for example, let me remove, okay, this is our fair value gap, right? Let's leave that there. So let me highlight here this other block here. Okay, this other block here, right? You can see that, highlight that there. Okay, you will notice that what market actually respected it. Okay, it has not been violated, so that's our other block. Let's just mark it like that. Okay, so we have marked that. Okay, so when price, so guys, what price is actually doing now is actually using this particular order block to take out our supply level here. Remember, we highlighted this place as our supply level, and we said that usually the idea behind this is once market comes to test this supply, or if you want to call it this order block here, what market is intended to do is to actually use this level to break our low. Remember the structure where we are coming from, right? Our high low high here, right? And so market is testing this supply to give us our next low here after breaking this low, right? So if that's not the case, if market here takes out this particular high here, right, it therefore means that the level that takes out this high here, guys, will now become our demand. That is where we will be targeting for our entry. So if you don't get it at this point, it means that what, you have to come back to this particular place. Okay, this is how you'll be able to get this entry. Now what we are going to do now is to wait for market to actually break out from this high. That's why it's looking as if market is having difficulty breaking out. We are going to wait for market to break out from this high. Then once market breaks out from that high, there are two likely places, or three, that we are going to watch out depending on how we want to catch this entry. We have this, and somewhere around here. So we have three possible places. Okay, remember this place is our imbalance, our fair value gap, where price came to. Then this place is the place where we have the last order block that is being tested, right? So if price should break out from this high here, okay, so it therefore means that what, the retracement will be back to this place where price took orders from. So there might still be some orders that are left that has not been taken by the market, so market will still come back to take them. I want to believe we are following what I'm saying and it's not confusing at this moment. So let me just come back and recap on that so that we'll be able to get it. Remember we said that what, this is what market is doing, right? So this is our high here, low, high. We have a high here, low here, we have a low here, right? So market is reacting from this level here, okay, and we say that we have identified here to be our supply level. And the idea of market testing this is for it to come and break this low, okay. But if that doesn't happen and market takes out this high, it therefore means that we are going to be considering the level that takes out this high here, okay. So that level that takes out this high here is what will now be our demand. Remember we'll be talking about order block, demand level, okay. So what I'm just talking about now is about supply and demand, because here is actually our supply level. For now this is like a potential demand level. So if this demand level here breaks out here, we'll be waiting for price to come to retrace back to that level before continuing its buy, okay. So what we are going to do now is to actually wait for market to break above. So instead of waiting for market to come and give us a change of character here, this is where we wait for market to break out, okay. And don't forget we've identified a demand level here, okay. We've identified a demand level here. Don't forget also we have an order block here, but we are not interested in this order block, right, because there have been no break of structure above. So we are not considering this order block. We already have a level here that we want price to come back to, okay. We already have a level there that we want price to come back to, so we'll just keep that level. So far so good. Now if we look very well, we'll notice that what, price has reacted from this order block here. Remember we have an order block here, okay. we have an order block here. All right, we have an order block here. So two things now. If price, this is how I want us to take, if we are going to take an entry using this technique. Okay, if price should use this order block to break out, we are going to wait for a retracement back to this order block and take our entry. Okay, we are going to take our entry. At this moment here, price must react if it retraces back here. Okay, if price does not break out, and price just comes and take out this level here, this is where we are going to be targeting for our entry. If price does not come back after taking this level and breaks out, we are still going to be waiting and targeting for this level. Okay, so whatever happens, I want us to keep an eye on these two places here. Okay, here and here. So if price breaks out now, we'll wait for price to give us a retracement. Okay, so we'll just wait for the breakout. Okay, we'll just wait for the breakout here. So you can see that so maybe price will break out today, or maybe tomorrow's candle will break it out. Or whatever the case, we'll just wait, or we know that something is going to happen either once price gets here or here. So these are the two places we are considering, okay, for our entry. So guys, this is over 1 hour, right? I don't want this thing to be too long because before it starts uploading on the platform, it will take time and it will consume a lot of data, right? So please, this is the analysis of the VIX 25 crash. Okay, so I've put a limit here on crash 500. Okay, so I'm just going to be looking at crash 500 and VIX 25, right? So please, we can use these ideas, right? And that is why I did not talk about, I just barely talked about entry a little. Okay, because the goal is not just about the strategy, or right, it's about analyzing and coming to a place where you'll be able to say, okay, this is what I believe price should be doing now, and then whatever strategy we have, we can use it alongside with some of these things that we have been talking about, guys. So this where we are now. Okay, this is where we are. So we know that VIX 25 what is a buy. So these are the opportunities at this level here. Can you see that what will be considering? Okay, will be considering, guys. So please, this is the shift in market structure I talked in the mentorship course, right? So if you are able to identify this shift in market structure here, you will notice that what, so this is the shift in market structure. So we are anticipating for price to come back here, So price will either react from here. If it doesn't react from here, I don't want to consider this other block here, right? It might still come to this other block here and react, but whatever the case may be, let's keep an eye. And then don't forget, you can always go to the 5 minutes time frame or the 15 minutes time frame to refine your entry. Okay, look for a change of character, look for more structure, wait for retracement before you take any entry or before you use your strategy. Okay, so these are some of the things, right? So let's just stop here because of time's sake. We spent over an hour. Okay, I think we'll be able to achieve um something today. Okay, so please, for those of us in mentorship class, you can do it to ask your question. Okay, and then we'll try as much as possible to attend to it. So thank you guys. I'll see us in the mentorship community, right? So please, let's go back, use these things that we've talked to really look at the different markets. Okay, to look at the different markets. So we've come to the end of the class, guys.